Welcome to Fear and Greed, the week ahead. I'm Jennifer Duke, and I'm joined by economist Stephen Koukoulas. You'll find him at thekouk.com, that's THEKOUK.com, and on X using the handle thekouk. Stephen, good morning.
Good morning, and after a fabulous weekend of football grand finals, what a way to kick off a new week.
That is true, but last week was a massive one, and I first of all want to talk to you about the inflation figures because things got pretty heated online for you last week. Can you talk us through what happened with that data?
Yes, the inflation numbers did show a little bit of an upturn in the annual inflation reading. It was 4.9% in the year to July. The August numbers showed an increase to 5.2%, which was actually pretty much bang on market expectations because we know oil prices, petrol prices increased by about 9% in the month. So there were no surprises there. And all I was sort of alluding to is that, first of all, that on any economic or even market trend, it's not a straight line month after month after month going in the same direction. There's always zigs and zags, but the trend is still very much for lower inflation. So don't get too upset about it. And then the other thing which had a few people hot under the collar, let's say, because inflation picked up, you silly clown, is that, well, would an RBA rate hike really force the Saudis to increase their production of oil to push the oil price down? The short answer is no. And for anybody as old as me or who has studied what happened in the mid-70s oil price shock, is that central banks shouldn't be hiking interest rates in response to something that are not interest rate sensitive. In Australia, we've learnt that with cyclones impacting banana prices, floods impacting lettuce prices, and now globally, oil prices. And yes, look, it's feeding into inflation. There's no doubt about that. It is. However, just as quickly as the oil price has gone from $70 a barrel to $95 a barrel, it could easily come back down. And wouldn't you look silly as a central banker if you hiked interest rates if that happened?
It's a very good point. Now, we also had a lot of other data out last week that I think the RBA will be looking at pretty closely as well. Can you go through what some of those statistics were?
Yes, and they were really important data, and they were generally weak. So that sort of fits with the story, just putting the month-on-month volatility and inflation aside, goodness me. But we had weakness coming through in job vacancies, obviously a really important leading indicator for future employment trends. The ABS measure fell actually 9% in the 3 months to August. So it was a very big decline, and it's down 18% from the peak 15 months ago. So demand for labour is starting to cool in line with the weakening in the economy. That's goes without saying, I think, but it's nice to see these trends confirmed in the economic slowdown. The other thing was retail sales, which came in at only plus 0.2% for the month. People were thinking that it might have been a bit of a higher number. The Matildas football team, there's lots of spending on paraphernalia, scarves, hats, and eating out and celebrating their fantastic performance through the World Cup. But alas, it was only a 0.2% increase. And if we look at things like food spending, it actually went down in the month. So it's really a sign that consumers are continuing to hunker down, if you like, responding to cost of living pressures, higher interest rates, and even the early signs of a turning point in the labour market by paring back their spending. So inflation blipped up, economic growth continued to weaken, and that's the sort of run rate for the economy for last week.
And we've also obviously got that Reserve Bank meeting coming up this week. What's your expectation of what they might do?
Yes, RBA, no change. I think that's pretty much locked in. The evolution of events since their last meeting, which they held rate steady, in fact, the last 3 meetings that they've held rate steady, has been, just as we said, the economy is slowing. So it had to slow down in one sense. So the RBA would be content to see the growth momentum of the economy panning out pretty much as expected. Look, they'll be looking at the commodity price, the oil price, blip in inflation, and they'll be canvassing what that means. I think that'll be a very important paragraph in their statement that comes out after their meeting. So to see just how they're interpreting the oil price move of the last few months. But no change. They'll probably have the bias that if there is a move in the next few months, it'll be up, not down. That sort of tired old cliche. But there's really no change expected. The economy's weakening. And yes, there's already, as they keep saying, the yet to be felt effects of the rate hikes that they've already delivered.
And what other data reports are we expecting to see over the week?
Yeah, good news. Again, we're going to get a little bit more information on how this economy is going. House prices, the CoreLogic numbers come out. They will almost inevitably show an increase of about 1%, another 1% monthly increase in house prices in the month of September. We know from their partial data that Sydney, Adelaide and Perth are increasing by more than that, about 1.25%. So that's a really hefty increase in house prices. Melbourne's lagging a bit, Hobart, Canberra a little bit weaker too. But bottom line, nationwide prices up about 1%. That's good old supply and demand coming into play. We've got building approvals numbers, and speaking of which, we need more supply. That's something that we've spoken about, Jen, in the last few weeks, that if we tackle this house price affordability, house rental affordability, we need more buildings. So we're hoping that we get a pickup in building approvals because we need more dwellings. The supply's got to increase. I think the market's looking for a small increase, but any increase is a good one at this stage. We've also got job ads, again, probably consistent with the job vacancy series. There's slightly different coverage in those two series, probably trending lower again. And really importantly, on Friday, we have the RBA releasing their financial stability report, which is an assessment of the financial health of the household sector. Obviously, that's probably going to be flagging some negative aspects as this cost of living pressures increase. Is there any material increase in provisioning for bad and doubtful debts? Are people falling behind in their repayments? But it also looks at the small and big business sector too, because of course they're suffering from the economic slowdown. And indeed, many businesses have borrowing, debt, overdrafts, and they're paying a higher interest rate as well. So that'll be more of one to sort of mull over a few days rather than an instant effect on the economy. But a lot of news coming out this week after a lot of news last week.
Yeah, it's a big one after a long weekend. Stephen, have a great week.
Thanks, Jen. All the best to you too.
And that was economist Stephen Koukoulas, better known as The Kouk. You can find him at thekouk.com and follow him on X using the handle The Kouk. I'm Jennifer Duke, economics correspondent at Capital Brief, and this is Fear and Greed, the week ahead.